Hello everyone, welcome back to Just Invest Today, and today we're talking about everything China, what's happening in the market. We're talking about Alibaba, JD, we're talking about Tencent. A lot of these Chinese companies are just under pressure from the market environment. What do we see with China? I'm going to give you the bullish news, the bad news, everything around China and these tech companies because man, I have so much money in these companies. This is majority of my portfolio, these three companies, like over 50%. So I'm willing to hold. And remember, I'm having this 5-year time horizon for these companies to make sure I'm not just going in and out of these companies. So I'm having this 5-year time horizon because that's when like the earnings of the businesses are really going to show for these companies, because I invested in like around the end of 2021 or the middle of it into these companies. And I still feel like they have so much room to grow. They have so much potential, but the market is not really giving it right now. And it was a micro bet because remember, China was crashing while the US stocks and the Canadian stocks were all going crazy. So that was my thesis kind of back then. China was taking a huge hit from all the anti-monopoly fines. As that market was going down, I invested in that market while all the US companies and Canadian companies and European companies were all going sky high. So I was kind of doing the opposite of what everyone else has been doing. And it hasn't really paid off yet. I still have a 5-year time horizon. It's only been like the first year pretty much, and it's not even the end of the year. So there's still a lot of gains to be made as I'm looking 5 years. And I guarantee you in 5 years, all these companies' earnings are going to shoot up rapidly. And remember, the stock price follows the earnings. So if these companies have good earnings into the future, I'm going to succeed in having these bets actually pay out in Alibaba, JD, and Tencent. So let's get into this first article. So BlackRock's China ETF lowers record cash amid world-beating rally. So the exchange-traded fund attracted $333 million on Wednesday, investors allocating to anything going up. This is an old article, June 30th, 2020, but investors are piling into the largest US-listed exchange-traded fund tracking Chinese stocks, as loosening virus restrictions and easing regulatory crackdown attract buyers to a market deemed uninvestable by some just months ago. So remember this whole uninvestable article, and that was honestly like the lows of Alibaba. Alibaba went down to like $85, $76, and that's when people were coming out saying it was uninvestable. And honestly, that's when you're supposed to be investing in these companies and areas, because when people say it's uninvestable, it's usually the opposite of what they're saying, and that's how kind of like John Templeton would think of the situation. But this just goes to show you that people are looking at the environment in the US and seeing high inflation, seeing what the Fed is doing with the interest rates, just raising the rates, and they're seeing, damn, like this is causing a recession. But you see China doing the opposite. They're lowering interest rates, they're putting money into the system. Inflation is not even like a thing in China right now. So you can kind of see the opposite point of view in China, and that's why people are kind of going into China more right now. And this is kind of why they had that little rally. When that sentiment shifts, you're going to see a lot of different investors coming back to China, but maybe the whole China argument is just over. No one's ever going to invest back into China. This next article is very key because this just goes to show you that there's still a lot of ways where the market can just succeed in China and actually bring in more capital. So ETF Connect to strengthen Hong Kong's superconductor role and solidify Citi's position as Asia's top ETF trading hub. Under the new cross-border trading scheme, 83 mainland-listed ETFs, 53 in Shanghai and 30 in Shenzhen, can initially be traded by international investors. The ETF will attract up to 200 billion, 29 billion US of capital into mainland China's ETF market within 1 to 2 years. China Asset Management says. You can see the role of the government and what they're doing to the capital markets. They're trying to get more international investors and connect Hong Kong with mainland China, which is going to bring in a lot more money into the system in a couple years. So this is just a huge bullish sign for the Chinese market. The ETF Connect is an important milestone as it signifies another Connect program beyond the trading of stocks for the first time, said Christina. Unique link will broaden the investor base for both Hong Kong and mainland ETF markets. It will spur demand, boost capital flows, and liquidity. This will allow Hong Kong to capitalize on its growth as an ETF hub in Asia Pacific. The ETF Connect is just going to bring in so much more capital for these companies, and this is going to allow actually like investors internationally to get into this market. Plus, it's going to be kind of solidifying the ETF more, so they're going to be kind of more secure in investing into these ETFs. So this is going to provide so much benefit for these companies. And you have to remember, because in the USA right now, look what Janet Yellen just said. The economy is slowing, but it's not a recession. Preliminary data for the second quarter of GDP is released Thursday by the Bureau of Economic Analysis. The expectation is for growth of 1.6% after first quarter contraction of 1.6%. So they're expecting a GDP growth of only 1.6%, just coming off a negative 1.6%. Can you understand what's happening in the USA right now? And China is actually dealing with the same issues because they had the zero COVID policy. They had the huge shutdown on major cities in China. It's crazy what they did over there. And who knows how long does it continue, even though they opened up a lot more. There's still a lot of testing. There's still a lot of places where it's kind of, you can't move as much, and the travel is all the way down. So there's so much to talk about the GDP growth in China as well. It's at probably like 1% or 0.5%. But what happens when they open up and things start getting cracking down there? It's going to be insane, because remember, they were averaging, or they were hoping to get like 5-6% GDP growth if everything was smooth. Can you imagine they go back to that? Like Alibaba, Tencent, JD.com, they're all going to be like enamored in that. They're all going to be a benefit of the GDP in China growing. This is on top of this real estate crisis that's happening in China right now. People are just forbidding, they're not going into their mortgages, or they're not paying down their mortgages anymore. There's a real estate crisis in China, and hopefully the government talks about they're going to back this up. They're not going to let this explode, because people are talking about this. This is another Lehman Brothers situation. This might happen again in China. Everything's going to explode, blah, blah, blah. So who knows what's going to happen in this Chinese market when it comes to this real estate bubble and people not paying down their mortgages, people not going into the housing market anymore. Because you got to remember that a lot of people in China thought about housing as their way to generate wealth, and hopefully that might switch. Maybe people in China start thinking like, oh my god, like stocks is actually the way to go, because people in China are not investing in stocks like USA, like Canada, like they don't have pension funds like that. So China is still like really early on in stocks, and like majority of the population just trade in and out of stocks. There's not like USA, where they're kind of more long-term holders, even though they're not holding long-term, but still more than China. Like China, there's like no one investing, no one trusts the market. So you can see the different kind of sphere when it comes to the capital markets in China. Everything is real estate, like watches, luxury goods. So you can see the huge difference. And plus, the Alibaba fines, the Tencent fines are keep happening. There's so much interesting things happening in China right now. Please like this video, subscribe to my channel, and I'll get back to you in the next video.